Welcome to Wealth Echelon, your go-to destination for expert insights on finance, stocks, and ETFs. Our mission is to empower you with the knowledge and strategies needed to navigate the financial markets with confidence. Whether you're a beginner looking to build a strong investment portfolio or an experienced investor seeking market trends and analysis, we've got you covered. Join us as we break down complex financial concepts, explore market opportunities, and help you climb the ladder to financial success. Subscribe now and take control. What if you could invest in a single asset that not only provides steady dividend income, but also positions you to benefit from one of the most critical sectors driving the global economy? The 2025 Reconstitution of SCHD has done just that, introducing major energy players like ConocoPhillips and Schlumberger to its portfolio. This strategic shift reflects a growing recognition that energy remains a cornerstone of economic stability, powering industries, infrastructure, and technological advancements. But why does this matter for you as an investor? The inclusion of these energy giants means SCHD now has greater exposure to companies with strong cash flows, reliable dividend payouts, and the ability to thrive even in times of economic uncertainty. ConocoPhillips, one of the world's leading oil exploration and production companies, has a long history of returning capital to shareholders through dividends and stock buybacks. Meanwhile, Schlumberger, a dominant force in oilfield services, ensures the energy sector remains efficient and productive, regardless of market fluctuations. With energy prices remaining a key driver of inflation and global demand for oil and gas continuing to rise, SCHD's latest restructuring positions it as an even more powerful vehicle for long-term wealth creation. By holding shares in this ETF, investors are not just betting on short-term gains, but aligning themselves with a sector that has historically outperformed during inflationary periods and economic recoveries. So what does this mean for your financial future? Whether you're investing a few hundred or a few $1,000s, SCHD's enhanced portfolio could offer higher dividend yields, greater stability, and a hedge against market volatility. As the global energy landscape evolves, these new additions may drive even stronger returns, making now the perfect time to reassess your investment strategy. Are you ready to take advantage of this opportunity and watch your portfolio grow? Investors looking for a reliable dividend-focused exchange-traded fund, ETF, often consider the Schwab U.S. Dividend Equity ETF, SCHD, as a strong candidate. With a history of providing steady dividend income and capital appreciation, SCHD has been a preferred choice for income-focused investors. However, one of the key aspects of SCHD's investment strategy is its annual reconstitution, which can significantly impact its holdings and future performance. The 2025 Reconstitution of SCHD introduced important changes that every investor should be aware of as they affect sector exposure, dividend yield, and potential price appreciation. SCHD and its strategy. SCHD is designed to track the performance of the Dow Jones U.S. Dividend 100 Index. The fund primarily invests in high-quality dividend-paying companies with a consistent track record of dividend payments over the years. It focuses on companies that exhibit financial strength, profitability, and a commitment to returning capital to shareholders through dividends. This makes SCHD an attractive option for long-term investors looking for income and stability. One of the defining features of SCHD is its low expense ratio, which currently stands at just 0.06%. This makes it one of the most cost-efficient ETFs in its category. Additionally, SCHD tends to have a relatively low turnover rate, meaning that it does not frequently change its holdings unless required by the index methodology. However, during the annual reconstitution process, the fund makes adjustments by removing underperforming stocks and adding new ones that meet its stringent selection criteria. The 2025 reconstitution of SCHD saw significant adjustments, with approximately 20% of its holdings being altered. These changes are critical for investors because they influence the ETF's sector allocation, dividend yield, and growth prospects. Significance of ConocoPhillips, COP, in SCHD's portfolio. ConocoPhillips is a global leader in oil and natural gas exploration and production, with a diversified portfolio spanning multiple continents. The company has maintained a strong track record of profitability and dividend payments, making it an attractive choice for SCHD. With the ongoing global energy demand, especially in emerging markets, ConocoPhillips benefits from its expansive oil reserves, efficient production capabilities, and strategic investments in low-cost extraction technologies. Furthermore, ConocoPhillips has consistently increased its dividend payouts over the years, which aligns well with SCHD's focus on companies that prioritize shareholder returns. The company's capital allocation strategy includes both dividend growth and stock buybacks, reinforcing its appeal as a high-quality dividend payer. Additionally, with oil prices showing resilience amid geopolitical tensions and supply-demand imbalances, ConocoPhillips is well-positioned to generate substantial cash flows, which could contribute to SCHD's overall dividend yield and price appreciation. Impact of Schlumberger, SLB, on SCHD's stability. Schlumberger, as one of the world's largest oilfield services companies, plays a crucial role in supporting energy production and exploration activities worldwide. Unlike ConocoPhillips, which focuses on direct oil and gas extraction, Schlumberger provides critical services, including drilling, reservoir characterization, and production optimization. This makes it a key enabler of efficient energy production, which is particularly valuable in an era of rising operational costs and technological advancements in the oil and gas sector. By adding Schlumberger to its holdings, SCHD gains exposure to an essential segment of the energy industry that benefits regardless of oil price fluctuations. Even when oil prices decline, companies like Schlumberger continue to generate revenue by providing necessary technological solutions that improve energy efficiency and reduce production costs. Additionally, Schlumberger has a strong history of paying dividends and adapting to industry cycles, making it a strategic addition to SCHD's portfolio. Overall, SCHD's decision to increase its energy sector exposure by including ConocoPhillips and Schlumberger positions the fund to benefit from global energy demand, inflation protection, and steady dividend income. Investors in SCHD can expect a strengthened portfolio with enhanced yield potential while maintaining the fund's core focus on financial stability and long-term growth. Stocks removed from SCHD. On the other hand, the 2025 Reconstitution resulted in the removal of some high-profile companies, including Pfizer PFE and BlackRock BLK. The exclusion of Pfizer, a pharmaceutical giant, could be due to concerns about slowing revenue growth following the peak of COVID-19 vaccine sales. BlackRock, a major asset management firm, was also removed, possibly due to changes in profitability metrics or dividend sustainability concerns. These removals reflect SCHD's emphasis on maintaining a high-quality dividend portfolio. While Pfizer and BlackRock have been strong performers in the past, their removal suggests that the fund managers are prioritizing companies with stronger dividend growth potential and financial stability in the current economic environment. The Reconstitution slightly decreased SCHD's dividend yield by 0.07%, bringing it to approximately 3.81% at current prices. While this reduction may seem minimal, it highlights the fund's careful balance between maintaining a strong dividend yield and ensuring sustainable long-term growth. The increased allocation to energy stocks has contributed to a more diversified sector exposure. With energy prices remaining volatile, this shift could provide higher dividends in the short term while exposing the fund to potential market fluctuations. Meanwhile, the removal of certain financial and healthcare stocks has altered the overall risk-reward profile of SCHD, making it crucial for investors to assess their own risk tolerance before committing to this ETF. Comparing SCHD with other ETFs, SCHD versus VOO, VGT, QQQM, and SCHG. Investors often compare SCHD with other popular ETFs to determine which one best suits their investment objectives. Some of the most common comparisons include SCHD versus VOO, Vanguard S&P 500 ETF. While VOO tracks the broader S&P 500 index, SCHD focuses exclusively on dividend-paying stocks. VOO has a lower dividend yield, but provides greater exposure to high-growth tech stocks. SCHD, on the other hand, is more suited for income-focused investors. SCHD versus VGT, Vanguard Information Technology ETF. VGT is a technology-focused ETF with significant exposure to high-growth companies such as Apple, Microsoft, and NVIDIA. SCHD, being more dividend-oriented, lacks heavy tech exposure, making it a better option for those seeking income stability rather than aggressive growth. SCHD versus QQQM, Invesco NASDAQ 100 ETF. QQQM tracks the NASDAQ 100 index and has a heavy concentration in technology stocks. Unlike SCHD, it has a lower dividend yield but offers higher growth potential. SCHD investors prioritize dividend reliability, while QQQM investors focus on capital appreciation. SCHD versus SCHG, Schwab U.S. Large Cap Growth ETF. SCHG includes high-growth companies, making it more volatile compared to SCHD. Investors who prefer a balance between growth and income might consider a combination of both ETFs. SCHD price prediction and future outlook. Based on market trends and historical performance, SCHD is expected to continue delivering strong returns through dividend reinvestment and capital appreciation. Analysts predict that SCHD's price could see steady growth, potentially reaching new highs as dividend-paying stocks regain popularity among investors. The increased exposure to energy stocks could provide short-term gains, especially if oil prices remain high. However, potential risks such as interest rate hikes and economic slowdowns could impact dividend-paying stocks in the near future. Long-term investors who believe in SCHD's strategy of investing in high-quality dividend stocks may see it as a solid option for portfolio stability. For an investor who starts with $100,000 in SCHD, the potential growth depends on several factors, including dividend reinvestment and price appreciation. Assuming SCHD grows at an average annual rate of 8%, including dividends and price appreciation, the investment would follow this trajectory. Year 1, $108,000. Year 5, $146,932. Year 10, $215,892. Year 20, $466,095. This projection assumes steady market conditions and reinvestment of dividends to maximize compounding returns. While past performance does not guarantee future results, SCHD's track record suggests that patient investors could benefit significantly over the long term. Is SCHD a buy in 2025? SCHD remains a top choice for dividend investors seeking reliable income and lower volatility compared to growth-focused ETFs. Its 2025 Reconstitution has introduced important changes that could influence its future performance. The increased allocation to energy stocks and the removal of financial and healthcare names indicate a shift in strategy, aiming for stronger dividend growth and financial stability. For investors who prioritize dividends, SCHD continues to be a strong contender in the ETF space. Its low expense ratio, diversified portfolio, and commitment to high-quality dividend stocks make it a worthwhile addition to long-term portfolios. However, investors should carefully assess their own investment goals and risk tolerance before making a decision. By combining SCHD with other ETFs like VOO, VGTV, or QQQM, investors can create a well-rounded portfolio that balances income, growth, and diversification. That's it for today's video. If you found this helpful, don't forget to like, subscribe, and turn on notifications so you never miss an update. At Wealth Echelon, we're all about helping you navigate the world of crypto, investing, and financial growth. Have any thoughts or questions? Drop them in the comments below. I'd love to hear from you. Stay sharp, stay invested, and I'll see you in the next one.